What's going on, everybody? It's Jeff here. Welcome back to the channel. Rocking start to a Monday. AMC up about 9%. It is looking like it is going to fight for that $40 close. We have just a few minutes while the market is still open. Guys, in this video, I want to talk a little bit about where AMC stands. I want to also mention something that I'm actually like seeing happening with AMC as well, which is a little bit separate from where it stands on the charts. Then I'm also going to talk about what is expected to happen this week and how it might affect the overall market. So let's get right into it. First and foremost, take a look at where we stand on the 4-hour chart. Still looking bullish from an RSI and a MACD standpoint. We hit that double bottom around that $32 level, pushed all the way back up to about 46, and now we have stair-stepped again. And this is a great pattern, guys. We are making higher lows, looking to see like we're probably going to bounce off that 43, 42.50, $43 mark as we will hit the 50 moving average as a little bit of a resistance. But still, guys, nice. We're up around 8.6% for the day. I do want to mention, guys, where exactly the VIX stands for. This is the fear, volatility index. This is a play I always like to be involved in, especially at times when the Fed is meeting. They are meeting tomorrow and Wednesday. We're going to get into that as well. I was not able to take a position. Something I really should have taken a position in on Friday. A couple of the individuals in the group did take a position, which, like I said, it can be very, very profitable. And it's just a great way to hedge against your portfolio. We're going to take a look at where the SPY sits, guys. Take a look at where this is. We're going to go back to the one-day chart. Look at this. This is on Monday, last Monday, where it came down, it curled down, bounced off the 50 moving average, and it regained all of it and then some. I actually did take a bearish position against the SPY as a way to hedge my portfolio in case any sell-offs happen, but especially with what is going on this week. Okay, so let me talk about now what is going on this week. So this is an article that came out, all right, so the Fed to discuss a pullback in economic aid with inflation being up. We've covered this numerous different times on my channel. Kind of my worries on the Fed's outlook, okay, as well as what is going to happen when this easy money policy ends, okay? Because like I said, all of this bullishness, the absolutely roaring, okay, bull market that we are in ever since March of 2020 of last year, eventually that solid climb going up, which I know some of you guys, it's cooled down a little bit. Some of the stocks that, the high growth stocks have cooled down a little bit, but when you look at the S&P, that thing just keeps on climbing. And eventually it's going to get a point to where we're going to break below that 50 moving average and we're going to have a little bit of a correction. Okay, we are in the second year of a bull market and it is highly likely that the S&P 500 will hit that correction territory, which is a pullback of 10% or more, okay, from all-time highs. But let me just cover a few key points in this article. Guys, with inflation uncomfortably high and COVID-19 Delta variant raising economic concerns, a divided Federal Reserve will meet this week to discuss when and how it should dial back its ultra low interest rates policy. Okay, this week's meeting occurs against the backdrop of a risky policy bet Jerome Powell has made. Yet the stakes around that bet are rising, with consumer prices having jumped 5.4% in June from a year ago. It's the biggest increase in 13 years. Think about what was 13 years ago, guys. That's 2008. Last month's surge marked a fourth straight month of unexpectedly large price increases, heightening fears that persistently higher inflation will erode the value of recent pay raises and undermine the economic recovery. I'm sure you guys have seen it pretty much everywhere, at the grocery store, at the pump. No matter what you are buying, prices are up. I will say this, lumber has scaled back a little bit from all-time highs. And if you look at where the housing industry sits, it has pulled back just a little bit. Some of that has to do with supply and demand as well. But like I said, it has pulled back a little bit from the June reports. The main concern is that the Fed will end up responding too late and too aggressively to high inflation by quickly jacking up interest rates and perhaps causing another recession. On Wednesday, the Fed issues a policy statement and Powell holds a news conference. Any signal that such progress is near could mean that the Fed is getting closer to reducing its bond purchases. So we've covered that numerous times before. I talked to you guys about the $120 billion a month the Fed is spending on purchasing treasury bonds and mortgage bonds, and they're doing that to keep the bond market afloat and to keep the economy, rolling. It's the same thing as what they did to us, all right, by giving us stimulus, okay? And it's the same thing that they did to everybody who wasn't working by giving us $600 and now $300 a month, which I believe is set to end in September. So we are getting to that point, guys, where all of this easy money policy is starting to pull back a little bit. These investors have, reaped the rewards, okay, from these massive runs ever since March of last year. And that's why, like I said, when looking at where the SPY sits exactly, taking out a bearish position like I did, all right, it was a put position a few weeks out. If you want to learn more about it, like I said, guys, first link in the description, okay, it goes everything over the option picks that I have, and it's an entire options course. It's insanely valuable, whether you're even interested in options right now or you want to wait a little bit. But it was a great play to be able just to hedge against my position. Every time the Fed seems to speak, there's a little bit of nervousness. All right. That's when you watch the VIX rip on Monday. You've watched the VIX rip on other times before. I didn't take a VIX play this time, and that's okay. I will wait probably for it to cool down a little bit more, and then I will continue to utilize that when I see it fit for me personally. Like I said, I just didn't get in a great position, but taking out a put position on the SPY to hedge against your portfolio is one of the first things I did about midday today. So lastly, guys, any type of bearish activity that happens, okay, in the market is generally bullish for stocks that could be heavily shorted, especially for ones that are held high on margin. Because when you have a liquidity of, let's say, $20 billion and your margin accessibility is $20 billion and you're at some of that peak, when your liquidity goes down because stocks drop, that's when margin calls happen. Okay. You also know that a lot of investors like us who hold the float in AMC, the retail investors, are not going to be selling during a bit of a pullback. Okay. The Russell 2000 might get hit a little bit, but like I said, if there's still bullish sentiment being floated in AMC, it will hold very well. And it normally does hold very well. Look at what happened on the Monday previous when the market was down. I think the Dow was down, I think close to 1,000 points. It was a very red day and it held very well. So it kind of runs inverse. It can run inverse. Okay. And it has as of late, not always, but that's always a bullish sentiment going in. Last thing I want to talk about, which for me being an options guy is kind of ironic, but I will show you this, guys. The options volume on AMC was much lower compared to the average, as you've seen it be a little bit, higher up on the list. Okay, especially right beneath Apple's. Apple's normally always number one. But there's one thing I will point out and why I kind of like this is because I've heard a lot of people all over the internet saying that they're done playing AMC options, and that can be a good thing because one, there is a little bit of sentiment out there that they let the prices run up, let you guys buy the options and then pull back. Okay. And they know they wipe out that premium from you guys. And like us, at times we might only have so much money to be able to bring in from our paychecks, okay, or wherever we get our money from, to be able to buy more stock. And when you're losing money on premiums and options, it just brings that value down. So there is a little bit of speculation on that, but it's also the point too that some of you guys aren't that experienced in options, and that's okay. I mean, by no means I would classify myself as a pro, not at all. But a lot of you guys are inexperienced in options, okay? And when your price is be running and you're choosing these strike prices and you're choosing the expiration dates when you really don't understand exactly how they work and how the Greeks work, okay, and how that plays into effect, it's probably best that some of you guys do stay away from options. So seeing that is actually a good sentiment, and it's been passed around all over the internet for a while, but it seems like it's really starting to flow into effect. Are you guys like, you know what, I'm going to stay away from the options and I'm just going to continue to buy and hold. So I just wanted to give that point out to you guys after seeing a little bit of a lower volume than I'm used to seeing. But like I said, if you are interested in learning options, whether you utilize them or not, I created a full in-depth training course. Okay, it's about 3.5, 4 hours long. Has everything you need to know from very, very basic beginner status of options to a little bit more intermediate strategy, vertical spreads, diagonal spreads, ion condors, okay, covered calls, cash secured puts, and stuff like that. It's absolutely great content. It's available to everybody who is in our private community. So if you're interested, guys, we'd love to come have you. But that's it for this video, guys. I'm ready to rock and see exactly what Tesla pulls out as I finish making this video. It'll be nice to see what their earnings are. But I'll see you in the next one.